Hello and welcome to FT Headquarters. 2018 was a year dominated by trade wars, the Brexit melodrama, and challenging markets for investors. What should investors be looking out for in the year ahead? I'm here with Florent Bronès, Chief Investment Officer at BNP Paribas Wealth Management, to discuss some of the themes that could come into play in 2019. Florent, thank you for joining me.
Hello.
BNP Paribas has just released its top 10 investment themes for 2019, and I'd like to take this opportunity to discuss a few of those with you. 2018 wasn't a great year for stock markets, yet most of the themes you've identified for this year focus on equities. Why do you expect the environment for equity investors to improve in 2019?
As you said, last year was impacted negatively by political items, political discussions, and those threats are still present. However, there is a disconnection between what's happening from a fundamental point of view and what's happening in the markets. From a fundamental point of view, economic growth is still positive, and we have seen that in the last figures in the US. For example, the last employment report was very strong, so domestic demand continues to be also very strong. Earnings growth continues also to be positive, and we have only a slowdown in terms of growth, both economic growth and earnings growth. However, the markets are going down essentially because of those political risks. Those political risks will not disappear just like that. It's impossible to forecast, but we believe that the fundamentals are solid enough to offset these uncertainties, and so we think it's a good moment to increase the position in some specific equity investment themes.
So you mentioned specific themes. Now you've released this list of your themes. Could you talk us through a couple of the big ones that you kind of see the best opportunities? And these, of course, maybe aren't just for the year ahead, but maybe they're longer term themes.
Exactly. We try to focus on long-term investment theme. So things which will do well, not for this year, not for the next 3 months, because we don't know, again, as I said, what will happen on the political front. But for example, we choose security or protection. We choose investment in high-tech for the industrial revolution underway, in the investment in robotics or in all sorts of new technologies. That will be a necessity, an absolute necessity for corporations to continue to invest in those segments. Otherwise, they will lose in terms of competitiveness. So whatever happened in terms of Brexit, negotiations between China and the US, and etc., all the political risks we have in our mind, companies will continue to invest. And we want to focus our equity investment on those long-term investment themes.
Now, is 2019 a particularly good time to go into these sort of themes? We obviously had a bit of a correction in stock markets at the end of last year. Is now a good time for valuations? Maybe they've come down a little bit. Or is this really just a case of identifying these themes and buying into them? You have to invest in these at some point. Or is 2019 a particularly good time for this?
Well, it's both of them. I mean, we mentioned those themes partially last year, and we will probably continue next year to talk about investment in technology, in healthcare, etc. However, after the sharp correction we had last year, especially in the US, the valuation improved, and they improved significantly. We had a sharp decline in prices, equity prices, but during the same period of time, earnings did continue to rise at a moment when yields went down. So mechanically, the valuation improved. During all the year 2018, almost all the year, the US markets were trading at a premium to long-term valuation measures. And today, they are back to long-term averages. The premium disappeared. So we are not saying that equities in the US are cheap, but they were overvalued, and now they are not overvalued anymore. For Europe, for the Eurozone especially, for the Japanese market, and also emerging markets, the valuation discounts are extremely important. So it's from a timing point of view, I don't have an idea about the politics, but I have a strong feeling, a strong conviction that the valuations are clearly in favor of taking more risk at the beginning of 2019.
Now, the themes you identify, do they tend to be global themes, or are they particularly focused in, you mentioned the US there, you've mentioned Asia. Are these themes that play out across markets that you tend to identify?
we identify 5 thematics which are cross-border, so global. Those are the technology we mentioned previously, and you can see the list on the different papers. But we have also 2 investment themes dedicated to Asia. One is about China, because we believe that the Chinese want to internationalize their financial markets. So it means to get the savings from foreign markets into Chinese equity, Chinese bonds, and also Chinese currency. So that will be favorable for the Chinese financial markets overall. But also there are opportunities in Asia with the tensions around trade, because some companies, some sectors will benefit from the tensions. And we think that in Asia, you have some countries like Vietnam or Philippines, for example, which will benefit from the tensions occurring at the moment.
So all this talk about trade wars and tensions, it's about finding those kind of companies that are going to do well in these situations.
Absolutely. It's a company-specific, but also sector-specific idea.
Now, you mentioned equities there. What about those investors who maybe aren't quite so bullish? They're worried about where equity markets are sitting at the moment, and they want to kind of diversify out. Where does a more kind of cautious-minded investor head at the moment?
Right. We have 2 dedicated investment themes to lower risk investors. So investors who do not want to take too much risk because of their personal desire. One will be to focus on specific structure which are low risk but positive returns over the long run, and some structure also which are linked to real assets. And by real asset, I mean real estate or agricultural loans or eventually private equities. That's the number 1 theme. The number 2 themes that we are mentioning is dedicated to equities, but to quality, solid companies. So we think that at the moment, if you have a long-term view, even if you don't want to take too much risk, you have a lot of blue chip companies which are trading well below long-term averages. So they are cheap from a quantitative point of view. They give good dividends, good dividend yields. The definition of solid companies is that they are not sensitive to the economic cycle. They have pricing power, and they have a low level of debt. And we think it's a good moment. The timing is perfect to increase the weighting of those kind of blue chips in the portfolio.
And finally, what do you see as the biggest challenges in the year ahead?
Biggest challenges will be the rise in interest rates, because from a global perspective, interest rates are too low at the moment. They don't cover inflation. So the real rates are negative, and it means that sooner or later, yields will go up. They did already partially in the US, so we are positive on the short end of the US curve, but on a global basis, yields are still too low. And we think that the market will have to digest the rise in interest rates in the future. But of course, this is not a short-term question. That will be a question forward-looking when the political risk will diminish.
Florent, thank you very much for joining me today.
Thank you.